Welcome to the Daily Update. This is Being Prepared Wednesday, February 16th, where we'll look at the action in the market today and then see how things look for Thursday, February 17th. It was a slightly up day, but it was a little bit more positive than you might think by just looking at Tuesday's close, Wednesday's open, Wednesday's close. There wasn't a really big move from day to day. What happened was more internal and more intraday, and I'll bring up the chart and show you about that. So we're looking at still a pretty much mixed environment overall. The people that think, yeah, we're shooting higher, well, that's still close. That's still potentially on the table. It could still happen. The people that said, we're just going straight down from here, well, that's not what's happening right now. You still have a market that is fairly confused. We have volume that's below average. Even though you have all kinds of things happening, there's a lot of indecisiveness right now. And so we're just kind of chopping around. The last couple of days have been more positive. We'll see how the rest of the week figures into the overall scheme of things. So to recap what happened on Wednesday, we did have a pretty much flat open, and that was to be expected. Before the market opened, we had a really strong retail sales number, and other economic reports that came out suggest strength, except in real estate. Real estate is starting to see some weakness, and that's why it's dropped into last place as far as our sectors are concerned. But right off the bat, we saw some selling, and we went down to about S1, which was around the 4440 level, and then pretty much drifted along S1, not really going much higher, not going much lower, until about 2 p.m. Eastern, when the FOMC meeting minutes were released, and the market reacted positively to that. Now, earlier in the morning, before the minutes were released, things were more negative because the markets were focused on the whole Ukrainian situation. Well, that's really interesting because on Tuesday, we kind of had the same information that Russia may be backing down a little bit, but it was unconfirmed. Well, then that seemed to bother the markets on Wednesday. So they're taking pretty much the same information and twisting it either positive or negative. But then things really switched after the meeting minutes came out. There was a positive reaction to the meeting minutes, and we went all the way up to R1, which is around 4490. And then we came down a little bit. We didn't close at the high, but we were up slightly. We were up 0.09% on Wednesday. So that's a positive day. Now, some of the other indexes actually were down. So there was a recovery that took place where the Dow, the small caps, mid caps, NASDAQ, they had been down pretty heavily. But then after the minutes were released, we saw things pump back up and come closer to slightly down, unchanged, to slightly positive. And then, as I said, volume was below average. So that's a little bit of a concern. What we're fixated on right now is that we're still seeing a mixed picture with a 0.09% gain. That really didn't change things, but it has given some of our indicators another day to calculate and to tell us what's going on, but it's not really giving us a very clear picture. And it's rarely ever clear. Each day, even in the most positive environment, there are still things to be concerned about. Even in the most negative environment, there are still positive things that we can look for. We just have to take this consensus, and that's what I do. This is called the consensus approach. It's the method that I use to reach a conclusion each day. We're still in the middle of earnings, which is then carrying over into other areas like inflation and interest rates, and I'll talk more about that. And then the geopolitical concerns, Russia, Ukraine. In the morning, the markets didn't like that. In the afternoon, the markets pretty much ignored that. There's really, really crazy stuff coming out of Canada. And I don't know if you pay attention to it that much. And my goal in these videos is not to state any kind of an opinion one way or the other. That's for a different time and place. What we want to watch for is what's happening in Canada, and will that drift into the US? And if that does drift into the US, what will that do to the financial markets? That's really the stance that I take in these videos. Not to say that one thing's right or wrong. Now, on a personal level, if you want to talk about these things, I have very strong opinions, but my goal is just to give you information, see how I'm interpreting things, and then let you decide what conclusions you reach based on what you see presented to you. And different people will reach different conclusions. We live in a real politically charged environment where a lot of the media is telling us, and even government is telling us what we need to think, what we need to believe, what we can do, what we can say. I don't take that approach at all in my program. I just try to present the information in an objective manner, let you take what I say, my analysis and commentary, and then apply it to your analysis and commentary for you then to decide what you want to do. Okay, I don't know why I got off on that, but it's been a while since I brought that up. What are some comments that we can make? Yes, this short-term and intermediate-term breakout, it's failed. We're still below that, but it's not necessarily off the table. Things, if they continue to be positive, this could come back in and be something that sends prices higher. We could also have a down day or two and have this unsettled. One thing that I have noticed over the years is the longer we consolidate at any particular level, the more intense the breakout will be once it finally happens. So this breakout may not happen, or if it does happen, it may be tomorrow, it may be a week, 2 weeks, 3 weeks from now. But the longer we wait, it's kind of like a pressure cooker, and prices are getting ready to do something. And once they have a conviction, boom, they tend to pretty much explode. And so we want to keep watching for that. What I've been warning about is to be careful of capitulation, where when I was talking about the breakout to the upside, well, that doesn't seem to be happening. So, but don't necessarily give up on that. Also, there are assumptions. Earlier in the week, our charts looked pretty negative, and it was, you could take the stance that, we're going lower from here. Well, we want to be careful of those things. We know they exist and we respect them, but we still have to see what's actually happening, not necessarily putting our subjective opinions on what we think will happen. There is still a potential de-escalation of the Russia-Ukraine situation, but a lot of that is unconfirmed. And we just have to take it day by day, hour by hour. The big invasion that was supposed to happen on Wednesday did not happen. So we'll see if something develops over the next few days. And then the next one I have, Canada, because there's really some strange things going on up there that a lot of people don't really like, and really goes against what a lot of American culture has been like for a long time. And people are seeing that and fearing, are these the kind of things that are starting to unfold in the US? The economic reports that we had, they were pretty much strong across the board. The market is still overvalued. We're still seeing a weakening trend. The last trend that the ADX picked up was down. And if we have an update, that trend is weakening. The bias, because we had 2 up days in a row, not very much, at least as of today, but we still were up 2 days in a row, and the momentum is still mixed because we're bouncing around like bumper cars right now. Let's look at the day's session as far as sentiment. We saw fear decrease a little bit in our index on Wednesday. Overall, we're still in the mid-range, so we're not giving an extreme reading right now. The VIX, because we had a slightly up day, on a closing basis, the VIX fell, so fear is falling slightly. And the bar chart, we closed right in about the middle. The VIX of the Vixen, which is the VIX, I'm sorry, the VIX of the VIX, the Vixen comes later. We're seeing a decline because we had an up day in the S&P. As far as our sectors, energy had a pretty good day. And you look here, the percent change, there were no blockbusters, but most of these were negative, only to switch back more positive as we went into the close on Wednesday. So not gangbuster changes, but internally we saw a pretty respected recovery after the meeting minutes were released. Materials were up, industrial and discretionary, which had just been getting hammered. Real estate was actually up a little bit, but it's been seeing some strength, or excuse me, some weakness as of late. So not a lot really happened, other than you could say these had been a lot more negative, only to come back and be slightly up overall. We had 9 out of the 11 sectors ended up closing positive, where I believe 10 out of the 11 were negative earlier in the session. Looking over on the left, energy, since our all-time high, has been performing very well. Here's real estate at the very end, and discretionary. So a good or bad day in one of these, and these might switch around a little bit. As far as inflation, the BDI was down a little bit on Wednesday. Now, this is where this is way before I would normally do this. We still have a month before the next Fed meeting, but there's so much in the news. There's so much going on, setting things up for this meeting. I feel that I need to cover this as things are happening. But if you remember, if you watched yesterday's video, this is where we were before the CPI came out. They had figured in about a 95% chance that in March, the Fed would raise interest rates 0.5% to 0.75%. Well, then that switched, where it didn't become as certain as it was before. And you really saw those that thought 0.25% to 0.5% was more likely, that gained a lot of probability that might happen. Well, this is where we're at as of right now. We've actually overtaken the 0.25% to 0.5% rate increase, and we're at 71%. And the idea of 0.5 to 0.75 is now trailing off, which again, if inflation is a problem, if the economy is growing too fast, you would think that it would be the other way around, that they would want to raise interest rates sooner and higher. But that's not what the market is saying right now. Then I also brought up another chart. This gives you some historical context. This blue line going along the top, which is decreasing and then now going back up, that's the 0 to 2.5. That's where we're at right now as far as interest rates. Then we have this orange line, which is 0.25% to 0.5% increase. As we were coming down with the blue line, we were going up with the orange line, and we're shooting all over the place right now. So that's where we're seeing this real tug of war going on right now. And that will continue as each day passes, as these geopolitical events work themselves in or out. As the market goes up or down, these things will change. So we want to keep a closer eye on them than usual. Our technical alerts, not very many, but most of them were negative and were generated earlier in the session. The NASDAQ went below 14.1, then it went below 14. The cyclicals, it crossed below 50. This is the value play. But then later in the day, the Dow crossed back above 35,000. Looking at the intraday chart, we didn't see a really big change from Tuesday to Wednesday, but we did see some initial selling right down to S1, and we danced along this. Now, that is not surprising, the fact that prices went sideways. What I've noticed on Fed days, when they're going to make an announcement or the minutes are released, it tends to have more of a positive backdrop. But because the markets are concerned about geopolitical events, we had more of a negative backdrop, but things drifted. This is when the minutes came out, and then The markets like that, and we're able to shoot above the daily pivot. We actually went into positive territory. We came down off the high, but you notice this S3 that we hit a few days ago? Well, that's now potentially acting as short-term resistance. So we got right about up to that level, and then some selling came in into the close. On a bar chart, yeah, you could look at some positive things here. We had a big down bar on Monday. We had the strong Tuesday, and then a continuation with a higher high on Wednesday. So from an S&P perspective, this is looking more positive, but we still have to regain the pivot level. And we still have this potential double top. We want to see, as prices work themselves out, is the right shoulder of a head and shoulders pattern, could that be forming? Because we have a lot of either support or resistance right above where we're at right now. We're down 6.7% currently, still in correction territory. It depends on who you talk to and how they do their calculations. Some people say, oh, we were down as much as 12% intraday. And that's true. I look at these things on a closing basis myself. Growth, even though we had a bit of an up day, growth saw a bit of a decline. Value was a little bit up on Wednesday. Our indexes that we look at were bouncing around, but you can tell earlier in 2021, we bounced around for a while too, as the market tries to sort out what it wants to do. But we are in a very different environment now than we were a year ago, because we're now in a higher inflationary environment. We're in a rising interest rate environment, where here, that's what the markets thought were happening. But once that was taken away, prices really started to shoot up again. We have to see here, is the same kind of thing going to play out? NASDAQ 100 underperformed the S&P slightly on Wednesday. As far as our trend, this is what I'm talking about with the ADX. It's trending down slightly, but the moving average and the ADX are pretty much right on top of each other. You have the red line above, so that means we default to the negative trend, but it is declining. And the green line, even though it's below, it is advancing slightly. Then the mass index, we're waiting for this. We're just above the 26.5 level where a signal is generated. Now, if a signal is generated, which it will be, we don't necessarily know if something's going to happen right away. And we don't necessarily know the direction. We just have to say, okay, this doesn't generate an awful lot of signals, but when it does, we need to pay attention to that and then adjust things at that time. Our scoreboard, it changed back to positive with the PMO signals. So it switched to positive on Monday, went back negative on Tuesday. Well, now it's back positive after Wednesday. Our breadth, new highs and new lows, was slightly positive, but nothing really strong at this point. So based on price, we're going a little bit higher. We are seeing that negative divergence based on volume. The advanced decline ratio, it's still below 0, even though we are going up slightly. New highs and new lows continue to decline on both of our trend studies that we have here. The accumulation distribution, because of the up day, we had a slight upward movement in this indicator, and we are above the moving average, and the moving average is continuing to move higher. Our short-term indicators, we're starting to come back and play around with the 20-period moving averages again. Especially this exponential, this might act as short-term resistance. If we can break above that, that would turn things back much more positive. And this is the double top that I'm talking about here. Very short term, but you have to look at what was going on here at this time when we could not break up out of that. That was seen as negative. Moving average study, a slight advance on the 20, 50, and 200 day. Then our spaghetti moving average chart, we're back above the 200, we're back above the 20, simple, but we have a lot of other moving averages we need to break back through for this to turn more positive. The MACD, it tried to cross over and go negative, but it is still slightly positive and going higher. Our STO, it's not picking up this strength that we're seeing. So on a short-term basis, this is saying based on price in the S&P 500, we're negative, and based on volume, we continue to be overall negative. So that's part of the mixed picture that we're seeing. The McClellan oscillator was ever so slightly positive. So we'll see a little bit of a turn up with the summation index. Our touchy Stoke RSI, it actually went down because it's seeing a lot of the bar that had been drawn earlier in the day. And our Williams percent R, it was pretty much flat. The force index, it's still negative overall, but is advancing slightly. Intermediate term, we are below the 50 period moving averages, and these are the important ones. This is what lots and lots of investors use. So if we do make an attempt to go higher, we really want to pay attention to both of these moving averages. The 100, or since we're going sideways so much, yeah, it's just trailing off now. Then our PMO, just a little bit positive on the overall reading, seeing a little bit of improvement based on price, but still overall negative based on volume. The other PMO study, those that are rising, advanced slightly, went a little bit up to sideways with those that are generating buy signals, and a little bit of a turn up with the PMOs that are positive. The BDI continues to show more internal weakness. Not very much. We're not seeing a big bar here, but even though we had an up day, it's picking up a lot of the point and figure sell signals that happened earlier in the session. The rainbow, we're still right in the middle right now. Stochastics, because we had 2 up days in a row, short term has turned back positive. Intermediate term is trying to roll back over positive. Longer term with the full stochastics, we are still negative. Summation index pretty much went sideways based on price and volume, even though we had a slightly positive reading with the McClellan oscillator. Our different oscillators that we look at, slope continues to go up. The MACD is trying to recover. Our longer term momentum study indicators are still positive. Our more intermediate term and short term, they're pretty much going sideways right now. CMF with the up day, it's back to looking more positive. And then this is another thing that we're watching for as well. We have a signal that was generated by the Pring bottom fisher indicator, and this continues to go higher, but we're just not seeing much follow through, at least yet, if we will even see that. This thing could go all the way up and we could head lower, and then we could see this indicator turn down. So this doesn't guarantee that some kind of a positive movement will happen. It just sees that one could happen. The vortex, flat based on the green line to slightly down based on the red line. Our trading systems, neutral with the elder, continue to be negative based on the SAR. Different charts, the Heiken Ashi, little bit of a positive candle was drawn after Wednesday. Nothing new on the Kagi chart, nothing new on the Renko chart. 3-line break, this black candle was a little bit lower on Tuesday. Well, it's not quite as big after Wednesday. Equi-volume, not really telling us much right now. Point and figure, also not really telling us anything. We had the 3 zeros drawn in there, but there hasn't been enough positive action to draw any more X's, nor a continuation of negative action to draw in more O's. The Fibonacci, retracement from the all-time high, we're back above this 38.2 retracement. So that could be seen as positive. Long-term on our arithmetic scale, again, I just want you to see the big overall picture with this. The line is still going up and we're above the red line currently. The logarithmic chart, same thing. The line is going higher and we are still slightly above that longer term moving average. The special K, it's going sideways to slightly down, and then looking at it a little more historically, it looks a little more down on this chart, even though it's the same calculation. The S&P, we're still bouncing around in this consolidation area, and we're still in about the midpoint here. With the mid caps, we're trying to come back up out of this, and the small caps, they're more at the upper range of the consolidation that we've been experiencing. FANG stocks, they had a fairly good day. They had been down pretty negative, only to come back and close near the high, but they were still down 0.18% on the day. So a lot of follow through buying is going to have to come in to make this chart more positive. ARC was down 3.2%, and you could possibly say that some kind of a base or level is forming if you're looking for prices to go higher, or this might be a plateau before we're getting ready to go lower. The Dow, we're still underneath the pivot and we're still underneath the 200-day moving average. We're slightly above the pivot on small caps, but again, nothing has really been decided. Mid caps above the pivot, below the moving averages, and the moving averages are on top of each other. NASDAQ, it was down slightly, but we're still below the pivot and below the moving averages. NASDAQ 100, also down slightly, below the pivot, below the moving averages. Our Vixen, because we saw that recovery later in the day, the VIX on the NASDAQ 100 did decline and closed just about at the low. NYSE, we're back above the pivot and back above the 200-day moving average, just like we were after Tuesday. So that's a little more positive. The S&P 100, we didn't see a lot of participation in the 100 biggest stocks on Wednesday. They have been the real leaders. A lot of the FANG stocks are part of the S&P 100. In fact, I think all of them are. So if we want leadership in tech to take the market higher, it's just not happening yet. But you could also look at this a little more positive, saying that those stocks aren't really controlling anything anymore. We have more of a broad-based stocks that are participating in prices advancing slightly. Wilshire, we're below the pivot and below the moving averages. Internationally, China is trying to roll over negative, where emerging markets, Europe, Japan, and even the US are still trying to turn back positive. Our all stocks were below the 200-day moving average as we bounce around at current levels. Broad market, the dollar suffered some weakness on Wednesday, so we're down into the 95 range, 95.70. The weekly chart, we're slightly below the blue moving average. Oil was up on Wednesday. We're back into the 93.66 range. Gold, okay, we're watching this to see, are we going to be able to break above this level? And if we do break above, are we going to be able to break above those levels set back in May of 2020? So gold looks like something positive could be developing, but will it continue? There have been lots of other times when it looked like things were positive, but there was no follow through. They ended up breaking down. Silver, not really looking as positive, but it had a pretty good up day on Wednesday. The CRB was up about a 1.25% overall. And just see how this thing has really climbed since the whole COVID plunge. Bitcoin's kind of floundering around in the mid 40s right now. As far as bonds, we're keeping an eye on this. We saw a little bit of a bounce in this chart, but with us just going straight down, if we drop below this, the potential of a recession could be high. Where the 3-month yield curve that we look at continues not to help us, but I still look at it every day. That's why I keep bringing it up here. Our Fibonacci retracement as far as interest rates, yeah, we broke above the 50% level. We're above 2% on the 10-year, and we're above other areas that acted as overhead resistance. As far as the yields across the board, a little bit of a decline in the 30, 10, 5, and 2, as well as the 3 months. So bonds went up slightly, interest rates came down, stocks were strongly negative, only to come back and be more unchanged by the time things got done. Internationally, we're seeing pretty much an overall trend up in interest rates, where even though we had an up day on Wednesday with bond prices, we are still in an overall downtrend. Then our corporate bond index, it declined based on price slightly. And then here is the interest rate. And I included more of this screenshot. The average right around in here now is 3.31% is the return you would get if you purchased corporate bonds. As far as our relative studies, we're watching gold. It broke down a little bit on Wednesday, but we're still above this red line. You can see the blue moving average is trying to turn up. And if we see a cross, that could signal that gold is really starting to outperform the S&P 500. It's pretending like it might do that now. That's what we're waiting to see. So what do we look for Thursday? The positive backdrop, which I was pretty much ready to take that out of the picture, but because we had the solid up day on Tuesday and a small continuation on Wednesday, that could come back. We're still in earnings season. There's still this battle between growth and value. On Thursday, we have housing starts. That might have a real impact on the real estate sector, and also building permits. We have the weekly initial and continuing jobless claims, and then there's the Philadelphia Fed index, which will come out. We still have these political events, or excuse me, geopolitical events, Russia, Ukraine, that could heat up or slow down almost without warning. And then what is the market going to choose to fixate on? Because they're taking pretty much the same news. One day it's positive, the next day it's negative. We've still got a few more days of the Olympics, but I haven't really seen anything that's come out to charge the political environment or the financial environment all that much. I'm not really hearing much from the Iran meetings, but Canada is really in the news right now. And some of you may be really in tune to that and really following what's going on, because it's quite a crazy situation right now. So our conclusion is the S&P is still mixed. The breakout is appearing less likely. Until we see some real convicted buying, we're still going in the less likely camp, but it is still possible. The short-term bias is mixed to positive. Intermediate term remains mixed. Long-term remains positive, but showing signs of weakness, especially if we drop below the 200-day moving average, and then that red line rolls over as well. So have a very good Thursday, and I will look to talk to you again after the market closes.